Good afternoon. July 24th, Friday, market close. These are usually a hybrid of the week and then a little bit of a weekly outlook. And then I usually like to come back on Sunday and relook at it with fresh eyes. But this is the Friday post close session. So let's start with gold. On the weekly, we're still in this range. About a month's gone by. We hit this level, this last low, had some buys, wicks below it, but aren't breaking through. Pretty much same story on the daily. We've had this zone of support that's held now for quite a bit. We had this double bottom off of it. We returned to it. We bounced off of it. So still just watching that. This line's actually should be back here just because it's broken. I could argue, you could say we're starting to wedge into this weekly kind of zone area. And should that be, there is divergence on the RSI, but there always kind of is the way the RSI is calculated. So high level, we're just still milling around with that support zone. On the 4 hour, I think it got really interesting this week because what we saw was a huge break of the trend line that we've just been following suit to all the way down. On the daily, you can see just how scalpel edged that was there. Ripped out of that and then came down pretty violently. So I've covered this in some other videos, but the downtrend of it happened with a nice, beautiful head and shoulders. The bottom neckline was both the 60-minute here change of structure and the 15-minute zoom out here change of structure. So it was just a beautiful trade that would have worked. And depending on this shoulder, that shoulder, had you held it all the way to tip or whatever, it was well over 3 here. I'll do it. It's major return on this one. So let's say you got in down here, and you did this shoulder. Had you held the end, you're at 3. Had you even gotten out a little early, you're easily between a 2 and 2.5. Go above this last shoulder, and 1.5 easy all day. 2 to 2 point something, depending on how much you just followed the market structure rule down. So great trade there. However, we're done talking about that because we're kind of looking at where we are now. So where we're at now with gold is we are bullish on the 240. We had that huge breakout. We're coming down. On the 60-minute, we've been retractive with that head and shoulders top. But now what we saw today, last night we formed this somewhat double bottom here. We'll see on the 15. More importantly, we broke up through. So we've structured bullish. If you count this line right here as the last high using the one candle rule, we cleared clearly above it. So we are in a bullish market structure. We had a pullback here, we came up. And right now in this, we are in the fib zone. So 40-minute bullish, 60-minute reversing bullish off of a fib zone on the 240. Oh, forgot to mention that. So we blew through the fib zone on the 240, but we just got above what it would be on the daily, which is marking it from down here. So uptrend, pullback, coming up. On the 60-minute, we're seeing change of structure. On the 15-minute, we have what I'm starting to call like the pulse, where it's flatline and it comes back down. We're right back in this zone here. So I'm pretty much just going to wait and see what happens. Because there's always one candle pullbacks, and even this pullback was getting hard to see structure in. If you go down to the 5-minute, you can see some clean structure, and technically we broke bullish today around just before close on the 5-minute, for that's worth. So we'll see what happens when we open up. Maybe we drop down and rip through, maybe we come up, I don't know, but in general, I'm looking to be bullish gold. Pound yen, not much to talk about this week. I won't get too much in the loss I took because it's another video, but we're at the top of the wedge. On the daily, we are bullish, clearly, and we've been just kind of hanging out here. I took a loss in this, not regretting it. It was in a good zone, but we have just been flatlining. It's interesting because economic calendar this week had, I forget, but a lot of Japan and British pound news. I think PMI, some other things. So I thought something was going to shake out, but it just didn't. So I'm sitting on hands. There's really nothing to talk about here until we start moving one way or the other. Let's go into the S&P 500. So on the weekly, we closed below the last candle, but we're still pretty flat up here, coming up enough trend. On the daily, clear uptrend here, but for the last better part of 2 months, we've just been in this trading range. The highs are back from June 2nd, and we're almost done with July now, and the low is from June 11th. So we're milling around. So I'm trying to play it much tighter. On the 240, we did see a little action. So you could argue we had this coil forming towards the end there. We got to the top, we double topped it. On the 240, we broke that neckline. We came down. We did very impulsive. We pulled back into about the mid-range of this coil, and then we impulsively broke through the coil's trend line, which also is a major market structure shift, more importantly than a trend line. But I do find it interesting. I've seen this before where we come right back up to that trend line and then drop right back down. That move happened pretty violently today. I want to take some time to look at that. So on the 1 hour at the time before the drop, I had this drawn out where this was the high and this was the low. So, and this is coming back to like if we were here, right? Or whatever, right? So here's the fib zone here. Here is the support and resistance zone. And we came up and came into it and then boom. So that's pretty fast acting on the 60-minute. On the 15, if you were looking at it, it certainly got a little wedgy. And I don't know if I'm diving into the 5-minute too much, but certainly boom, boom, and then this huge impulse candle. So the truth is, even if you would have, if I would have gotten here with this engulfing, I would have been okay. If I look down at the 5-minute, I think the 5-minute would have helped because either at the very top, I could have caught this double top with the neckline break or this wedge. I don't know that I would have though. I probably would have tried to be a little more patient, but that rip down, then this, and then a change of structure break right here would have also been a way to play this that would have worked out in your favor today. Nice little drop down. So all that said, where I'm at now is technically the hourly, well, the 240 is bearish cleanly. We did have a pullback up to about halfway, or at least the support resistance zone, and we slammed back down. The 60-minute has turned bullish. And so I'm kind of waiting just to see what happens on this one. I'm sitting on hands a little. Should we break through? Oh no, what am I talking about? Yeah, we're still bullish, but we came right back. We came right back down. I didn't have my chart marked right. We are still bullish on the 1 hour, but we came back down to the last area of support. And that's why I was looking for long today, because on the 15 as well, before we break market structure, because that's a 1 candle rule right there. But now I'm not sure, right? If what I'm just going to watch is, do we break through here, which would also be the hourly, in which case I could see us targeting lows down to here. Remember on the daily, that would just be kind of going back down into our range, the support of our range that we've been in. However, if we rip up and we break through this line here, I'm going to wait for a pullback and go long, and perhaps we start targeting these highs up here. I don't know, but not super clear signal on the S&P 500. On the euro, we're still in this range. We got really close, very impulsive down to it, but we're just milling around up top of it. We haven't broken out, a lot like the pound yen. It's also been better over a month that we've just been in this little scallop formation. So still just sitting on hands, waiting to see. Haven't really been watching this one too closely because of that. Oil, let's go to the weekly. So we had a huge pivot this week. I think it's more geopolitical driven. There's more fighting going on and all that, other straits and all that. I'm not going to pretend like I know too much about that, but it's been making the news, and clearly oil spiking. So on the daily, we still look to be bullish. We're still inside that bullish candle. Getting in the 240, we're clearly on this uptrend here, nice and clean. We are in the current leg of the uptrend of the 240, and we did pull back right into that fib zone and pop out. If I zoom in on the hourly, it was a pretty quick little pop as well. But we're still bearish on the hourly because even though we popped out, we haven't broken above this. This is a key. I mean, this may just get broken the minute we open on Monday, in which case I'm going to be very much looking to long because it'll be matching the 240 and the daily, and the 60-minute will match. So if we break up here, I'd like to see a pullback in and then go. And then just zooming in, I just want to call out that here it wasn't really like a double bottom, you know, on the 15-minute. This is back in that 4-hour fib zone. You could argue this kind of went in, so fine. If you want to zoom in, it was a nice, what do you call it, flag. But either way, it was a market shift. So here at this bar, had you gotten in, whether you call it a double bottom or just a structure shift, a change of character, I mean, you would have had a great trade up to this high here. And I want to just note this one because just things to watch out for is this was at the 240 zone right in here. And on the 1 hour, we came in, we kind of spiked, we had this doji. I think looking for this candle right here to strongly change the structure bullish would have been great. Had you put your risk reward below the low, get in at the close of this below the low, that would change it. This, if you played it all the way to this high, would have been a 2-bagger. Easily, even if you played a little conservatively, you're at 1.5. So quite nice there. You know, plenty of opportunities out there. So finishing up with Bitcoin, we've had 3 down days in a row. On the weekly, we're in the zone still. We've just been in the zone for a while. On the daily, we are almost dead flat, been stuck in the zone. Another one from somewhere in mid-June, right? June. So this month, we've just been milling around internally in here. On the 240, we do have a bear structure. So higher highs, or sorry, lower lows, lower highs, lower low, lower high, boom. I'm waiting to kind of see how we pull back into this and what we do. Areas of interest for me on the 240 are the fib, obviously, and then we're going to just be watching this little order block of support and resistance that kicked off that last move. So anywhere in here, I'm going to be watching. On the 60-minute, it's pretty much, I have it highlighted out here nicely. So not going to try to play the upswing of this, going to be watching to go short on this one. And I think, you know, plenty, I don't know what that's doing here, plenty of room to go short and still be within our range and just get down to, you know, anywhere in this zone here. And we haven't even violated anything on the daily. So playing a little tight here. And other than that, so really looking to have a pullback into the bear trend to short, opportunities to short Bitcoin. Gold, I'm overall looking for buys because where'd it go? We are in an uptrend on the 40. We changed the character on the 60 to be bullish, and we're staying in bullish, and we are in the fib zone of that 60 and 15-minute. So going to be watching that. And then the other big one is oil is the other one that I have a little bit of a bias towards going in, just because if we were to break bullish, we would be lined up at the 240 off of a fib zone and the daily and everything like that. So the other 3, I'm really just sitting on my hand: the euro, Bitcoin, euro, S&P 500, and the pound yen. All right, I'll do another Sunday fresh eye look, but that's it for the week.